Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Let's go ahead and jump right into it. Bitcoin currently trading at around $88,261. It's basically flat over the past 7 days, so we still haven't really been able to get back above 90 and show some support at 90. So we'll see if we have the so-called Santa Claus rally. We're a little bit doubtful of what the end of the year will bring, but it's definitely a possibility. Bitcoin can do anything at any time, so we shall see what happens over the next couple of weeks as we end out the year of 2025. Ethereum currently trading at $2,987, looking to try to get back above 3,000. It's down about 3% over the past 7 days. Then you have XRP is down nearly 4%, Solana down 3.5%, Dogecoin down 3%, and then Cardano down nearly 9%. Rounding out the top 10. So if we look at Bitcoin currently, we're seeing that we're still staying in that range between basically $80,000 and $100,000. Right now, over the last several weeks, we see that Bitcoin has basically been staying in that $80,000 to $90,000 range. Now, many people believe, or some of the speculators out there are saying that Bitcoin could have a rally going into year end. Who knows where that could go if we do see a rally? If not, we could still continue to see choppiness as we get into the macro. There's still some uncertainty with regards to the macroeconomic environment. So if we look here just to have perspective when it comes to Bitcoin, even though Bitcoin, at least as of right now, is down for the year, which isn't typical in the year following the Bitcoin halving. So a lot of people expected a so-called blow off top. We did reach all-time highs this year, but we have fallen back from those all-time highs, and Bitcoin currently is down around 9% from the beginning of this year. But if you look at the inflows that are still coming into the Bitcoin ETF, we're still seeing that demand is coming into the space. And even when you look at gold, for example, which has done over 60% this year, you still see that Bitcoin still had more inflows. The Bitcoin ETFs, the IBIT Bitcoin ETF specifically, had more inflows than the gold GLD ETF. So we're seeing that there's still a lot of institutional demand that's coming into cryptocurrency. We're still hearing a lot about banks that are also beginning to get involved with putting assets on the blockchain. We heard about JP Morgan, for example, is tokenizing a money market fund. BlackRock, the largest asset manager in the world, which is an issuer of IBIT, also has tokenized money market funds. So we're seeing that the banks and other payment platforms are finding the utility when it comes to Bitcoin and stable coins. So we're going to continue to see more of an influx coming into the space. So that's why we still remain very positive in terms of Bitcoin in the long term. Obviously, you're going to have volatility. That's the name of the game when it comes to cryptocurrencies, particularly with Bitcoin. But over the longer time span, you see that Bitcoin continues to outperform and do a lot better than the S&P 500 and gold, for example. So this past week, we had a lot of macroeconomic data points come out, and one of those data points is the inflation rate. The inflation rate is very key, particularly when it comes to the U.S. Federal Reserve, which basically sets monetary policy. And we see that this past week, we got a reading of 2.7% for the month of November. We didn't receive any data for October because of the United States government shutdown, but we see that inflation did come down a bit, definitely below expectations, and that's a good thing. We want to see the price of goods come down, and unemployment, as you see here, is on the uptick. We're seeing that it's about 4.6% for the month of November, and so it's definitely been on the rise. And so obviously we want to make sure that we see that unemployment starts to come down, as well as continuing to see inflation go down. And that's one of the main things that the U.S. Federal Reserve tries to make sure that they keep a balance on with regards to the monetary policy, and whether we go into a quantitative tightening or a quantitative easing cycle. Right now, we are going into a quantitative easing cycle. So there's a possibility that we could have more liquidity being pumped into the market. And so with that, inflation could go back up. So we're obviously going to see over time what happens. But right now we are seeing that inflation is coming back down to where it was in July of earlier this year, the Federal Reserve initially said that their goal was to get it down to 2%. It likely will not get down to 2%, but at least there is a 2 in front of the inflation number currently right now. So we're seeing that also the cost of other goods are still getting higher. A lot of us still see when we go to the grocery store, when we go out to eat and things of that nature, when we go to try to buy certain merchandise, that the prices are still high and they haven't gone down. So when we look at cars, for example, which is usually the second or third largest purchase for an average consumer, the new car prices have reached an all-time high. Now the average new car price is over $50,000. As you can see here, according to Kelley Blue Book, the ATP for a new vehicle, which is the average transaction price, has hit $50,364, and this was in September of 2025. We'll obviously get the numbers for the end of the year sometime in 2026. But we're seeing that the trend is going up when it comes to the cost of new vehicles, and the same goes for used vehicles as well. So it's getting to be more expensive. Unfortunately, people's wages are not going up as high as the average transaction prices for some of these major components, or I should say some of these major assets that people are trying to buy. So we obviously have to continue to keep an eye on that. When we look at the median sales prices, we've gone over this before, we're still near all-time highs, over $400,000 for the median home price, which is basically, if you go right down the middle of all the homes that are sold, from the highest priced homes to the lowest priced homes, what's that median level? And right now it's around $400,000 in the United States. So it's high, and we're seeing how much higher it has gotten just over the last 15 years, when it was basically half of what it is now 15 years ago in 2010. Also, we can see that the share of listings buyers can afford, if we look at 6 years ago in 2019 compared to 2025, this data was taken earlier this year, from March of 2025, we're seeing that it's becoming more difficult for people in certain brackets to buy homes that are listed on the market when we're looking at home prices. So if you look at somebody that made $75,000 a year, before, they were able to afford about half of the homes that were listed in the entire market. And then now it's gone all the way down to 21%. So basically $75,000 doesn't get you what it used to get you. And this is just in the last 6 years. So this is obviously an alarming statistic. We're seeing it basically going down for all major categories. Even if you're making $50,000, for example, you used to be able to afford at least about 28% of the homes that were listed in the market, and now we're seeing that it's less than 10%. Even if you're making $125,000, you are still unable to afford as many homes as you used to. It's only about half of what's out there in the market, and $125,000 a year is definitely considered a top salary in the United States. I believe it's in at least in the top 10%, top 5%, maybe even higher than that, lower than that, I should say, in terms of salaries in the United States. So we have to make sure that we be considerate of what's happening in the macro environment, because it definitely affects what goes on with markets, particularly with cryptocurrency, because it's still a so-called risky asset. It's a risk-on asset. And so if people don't have money to be able to buy homes, be able to buy cars, be able to buy food, they definitely won't have enough money to be able to invest in something like Bitcoin and cryptocurrency. So we definitely want to make sure that we keep an eye out on that. We talked about unemployment earlier. Once again, you see here it's currently at around 4.6%. So it is creeping up. So we definitely have to keep an eye out on that, because obviously if people are not working, then there's no money flow that's happening when it comes to any type of investing, and a lot of companies could suffer as well. So we'll definitely keep an eye out on that. So make sure to keep posted with us on X and on IG, as well as here on YouTube. We really appreciate you watching and keeping up with us here at Networkchain. Of course, we're going to continue to bring you the news, bring you the data. Make sure that you take care of yourselves out there. Happy holidays to all of you. Thank you for watching. We look forward to linking up with you soon. Take care. Bye-bye.